Ladies and gentlemen, good day and welcome to the Q2 FY2024 earnings conference call of Control Print Limited, hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Karan Bhatelia from Asian Market Securities Limited. Thank you, and over to you, sir.
Thanks, Michelle. Ladies and gentlemen, good afternoon, and welcome all to the Control Print Limited 2Q and first half FY24 earnings conference call, hosted by Asian Market Securities. From the management side, we have Mr. Shiva Kabra, Joint Managing Director, and Mr. Jaideep Barve, CFO. Now, I would like to hand over the call to Jaideep for his opening remarks, post which we shall open the floor for Q&A. Thanks, and over to you.
Hello, everybody, and good evening. I am Jaideep Barve, the Chief Financial Officer of Control Print Limited. Welcome you all to the earnings conference call for the second quarter and the first half of the financial year 2023-24. We appreciate that you have taken all the time from your busy schedules to attend this call. Hope you are all enjoying the Navratri festival and wish you and your family a happy Dussehra in advance. Mr. Shiva Kabra, our Joint Managing Director, also joins me on this call. The detailed presentation has already been put up on our website as well as in the investor presentation notification on the exchanges for this call. A brief analysis of the standalone financial statements for Control Print Limited for the quarter ended September for financial year 2024 is as follows. Revenues. We have achieved the highest ever Q2 operating revenues of rupees 83 crores. This has led to the record half-year ended operating revenues as well. The corresponding figures in the financial year were 68 crores as compared to 83 crores of this year. The increase in the H1 business by about 30 crores augurs well for the growth trajectory of a company. With improved industrial production in the country, we have seen an increase in the sales for both the printers as well as consumables as compared to the previous quarter. We continue to consolidate our position in large accounts and gradually increase our installation base in multiple printer accounts. With respect to the expenses, our consumption has remained steady at approximately 40% of the sales in the second quarter, which is more or less in line with the first quarter of FY2023-24. However, we can definitely hope for an improvement in reducing this in the current financial year with optimized buying strategies. Employee costs, depreciations, manufacturing costs, and other costs are all incurred in line with the business operations. Profitability level, our PAT for Q2 is 17.5% and the PAT for H1 is 17.68%. This is almost 1% increase as compared to the similar period of FY2022-23. The EBITDA, PBT, PAT, and the EPS, which excludes exceptional items, has grown by 18%, 25.5%, 28%, and 28% on a YOY basis. There exists a considerable amount of improvement due to higher revenues which will result in this year and complemented by economy of scale. With regards to the way forward, we have got focused marketing plans. We've got targets given to both our sales as well as inside sales teams. We have got better focus on our key accounts. We are increasing our install base, and we expect some good amount of traction in the business out of the market acquisition as well as with the new technologies like back and trade. The floor is now open for questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure that the management will be able to address questions from all participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We'll take the first question from the line of Dhruv Bajaj from Smart Sync Investment Advisory Services. Please go ahead.
Sir, firstly, congratulations on amazing set of results. So since I'm new to this business, so...
Bajaj, your voice is muffled, sir. May we request you to use your handset, please?
Yeah. Is it fine now?
Yes, sir, much better. Please continue.
Hello.
Yes, sir, please continue.
Am I audible now?
Yes, we can hear you.
Yes, sir. Yes, sir, please continue. As the current participant has left the queue, we'll move on to the next question, which is from the line of Himanshu Bisani from Niveshai. Please go ahead.
Himanshu, yeah.
Hello?
Yes, sir, please proceed.
I'm audible. Yeah. Congratulations, sir, for a good set of numbers. My first question would be some bookkeeping questions, like what are the number of printers we sold in this quarter, what was the capacity utilization for this quarter, and we have seen in the presentation you have mentioned that an increased market share, from 18.5% to 19%. So my question was this increase in market share led by the high gross margin printers, like for the laser and the new technology printers, or it was for the basic continuous or thermal printers?
Himanshu, this is Shiva Kabra. I'm going to answer this question. So, essentially, all printers were sales in this quarter. There's not a substantial change up of the mix. What we've done is, in the last year or so, which has been having more of a gradual effect, is we've been, focusing more on larger customers, where the per printer business is significantly higher. And the idea was to grow the sales overall in terms of number of printers, but especially to go for those customers who are going to give us significantly more business on a per printer basis. So we've been successful in changing the customer profile to some extent, but it's true that we have dropped some sales, but still it's a work in progress because larger customers have a longer pipeline, although the number of printers sold are higher also. So maybe at the end of the year we'll get a better read on whether we are actually having a slight decrease in sales as we focus more on the set of customers, or whether we're actually slightly dropping sales as a result. But irrespective that because of our per printer business increase as a result of focusing on the cream, we're still better off. But yeah, definitely we would expect to increase the number of printer sales and increase the business per printer. That's the target, of course. Problem is the target is different from the actual results sometimes.
Okay. And so what printers we sold in this quarter?
Yeah, hi Himanshu. For this quarter, we've sold... Yeah, sorry. Himanshu, can you hear me?
Yeah, please continue.
We sold about 705 printers in this quarter.
Okay. And what was the number for the same quarter last year?
It was 679.
Okay. And capacity utilization?
So, I mean, you must be running about 60% or something. So we bottleneck the factory quite extensively. But but it's difficult to predict the capacity. There are times when, there are not that many, it can be sometimes slightly lumpy or something, and you can get 2-3 large orders in one go. Sometimes it can be a steady type of sale. So you cannot look at overall capacity. You have to look at whether we're able to meet the peak. But we have that capacity to be able to, meet the peak. Like if we sold 1,000 printers a quarter, we would be quite comfortable with our current setup.
Okay, got it. On that, sir, the capacity, when we look at different types, SKUs of printers, does that change significantly when we are producing one type of printer or other?
So we have different capacity set up for each type of printer. It's not like a mix. So the people who are making one type of printer normally not making other types of printers. So like in every area, we have that ability to scale up. And if we feel that the demand between printers is shifting on a more permanent basis, then we might shift people from one part of the factory to another part of the factory, if you get my point. So, if someone is on a line to make the, something like the Suzuki Grand Vitara, and someone is on a line to make the, Alto or one of the other cars, So if we feel that there's a permanent shift, we can shift someone from the Alto to the Grand Vitara line or something, but otherwise we have a capacity for each thing and the labor associated and thing with that, but we can shift if we need to. So the training is not a problem. It's just that there are different parts in our factory which are created for different products, and we have to reconfigure that thing out.
Got it. Thank you so much, sir. I'll join back in the queue.
Thank you. We'll take the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah, Namaskar Jaideep sir, Namaskar Shivaji. Sir, if you could just reiterate the point which you were mentioning earlier about shifting of lines, I missed that part. What are you alluding to, sir, in terms of the type of printer we are doing, or is it subject to the consumables? Hello?
I didn't completely understand your question, Sakiji.
Yes, sir. I will repeat it, sir. I was just referring to the point you made earlier right now to the participant regarding the shifting of lines. What?
Mr. Kapoor, there is an airy disturbance which is coming along with your voice. May I request you to please use your...
Hello?
Yes, sir. This is much better. Please continue.
Yeah, just give me a second. I'm coming to a more receivable area. Now you can hear me, sir?
Yes, sir.
Sir, I was just referring to the point you made regarding the shifting of lines. What are you trying to allude to, sir, in terms of the type of printers we are making, or just a better understanding of what are you trying to convey, sir, by this?
Yeah. So what my belief is that Himanshu asked a question on the capacity at the factory.
Yes, sir.
I said that we have a capacity which we may be operating somewhere between 60 to 70%.
Correct.
Approximately, I believe we sold about 700 printers in the last quarter. So what I was saying is we can sell even 1,000 printers with our current capacity and current setup. Then I think Himanshu asked a second question, which was what if, do you have like a common capacity for all your printers, or do you have... So I said, no, we don't have a common capacity, Himanshu. We have a separate setup, manufacturing setup for each type of printer. And it is sort of fixed for that. But we can change people around if we feel that the demand for one printer is permanently increased or permanently decreased. So it's not like, if I have to make one type of printer in a higher quantity, I'll have to work that team overtime if it goes beyond the standard capacity. But if I feel like this is continuously there for 2-3 months, then what I will do is I will shift some people from underutilized parts of our factory to those teams because the skill set is quite common. So that is, I think it was more of a capacity question. It was not anything to do with...
Sir, how should one read this capacity utilization levels for our consumable segment? You answered it for your machines, but how are the consumables currently stacked up?
So in the consumables also we're about, I'd say like 60%, 60, 65. So whenever we come to a certain thing like 70, 80%, we just de-bottleneck. We don't announce it because these are like, insignificant. We keep spending a few crores. That's why the overall PPE or plant property equipment or whatever, not gone down that much. But we keep debottlenecking as and when we need, because we are normally at somewhere between 60 to 70%. We don't want to go beyond 70%. Because, like I said, sometimes we have that requirement which comes in a burst. And, because of the type of nature of our industry, we have to give printers, we have to give parts, we have to give service, we have to give fluids and consumables even at the peak capacity, because without that the line cannot operate, so we cannot, that's what the thing is. We have to be geared towards peak capacity, not just towards,
yes,
regular capacity.
Shiva sir, if you could give us or allude to the current business environment, in the key addressable market and the key industries where we are servicing, how are you seeing the demand lines, and how are their capex been aligned so that new lines would be would start contributing going ahead? To our key customers, what are their capex plans and how are we aligned to benefit from the same?
So, if you ask me, I think it's actually looking sort of positive because, there are two types of capex, I would say, in general, that are there with our customers. One is, people in the FMCG industry, people doing things like pipes, certain other types of things, which are not very heavy capex, if you will, So for Supreme to buy 10 extruders, or for, Unilever to add 2 bottling lines, or, someone else to add for Imami to add 2 Navratna oil lines, that's not a big capex. Their main costs are more in marketing, distribution, other types of things, maybe in whatever. But so that capex has honestly been quite consistent. If I look at over the last 5, 7, 10-year period, these people are continuously increasing their sales. Of course, it goes a bit up and down. But if you see the paint companies, these types of companies, they have for whatever reason, they're able to grow relatively consistently is what I'd say. So they, like the dairy companies, like Amul is always expanding. Now, whether they have an up year or a down year, their plan is always to increase capacity by some percentage. So those guys are very consistent. But what I feel is like the big capex, like the steel factories, the aluminium factories, the big cement, those types of big, big budget blockbuster type capexes, which sort of create a lot of capacity for all the industries down the line, and ease up the supply chain. That sort of improved. And I think that overall, I don't know how it is, honestly, I've not discussed it in depth, but I feel like the overall infrastructure in India, the power, the transport, the logistics has become more competitive, or at least seems to be less of a hassle than what it used to be, if you ask me. I don't know about what the customers are thinking. I'm talking from our own experience. So, you can fly anywhere to India, you can travel anywhere to India, the trains are there, the planes are there, the roads are there. Within the city, of course, it's difficult to debottleneck, even out there the metros are taking place slowly. But if you ask me, from an industrial perspective, it's much easier, to manufacture, to scale up and do other things in India than what it used to be. Yes. So I think, I feel like, people are doing big housing projects again, and those things, obviously, it could be a bullish thing, so I don't know. But, those are the things that drive the capex for the next 10 years, because in the end, the pipe companies and the paint companies will sell that extra amount depending on, how many houses are being sold and so on and so forth.
But taking this into account, we have always seen that H2 generally shapes better because the economic activity for the country gathers momentum post the festivity. So, in the likelihood of that getting traction, can we look at a 3-figure top line for Q4 exit? Is that could be a good likelihood going ahead?
See, we would definitely like to be positive about our business, but so far, as of H1, it's a very good sale for us. If you look at the top line, it's about 165 crores for us on a standalone basis. With this trend, obviously, if everything goes on well, we get the right product mix, we get the right prices for our customers. We would definitely achieve better numbers by March. So we are very positive about it.
Jaideep sir, last 2 points, when we look at the breakup of revenues, if we look at the standalone and the console number,
Mr. Kapoor,
I'll join the queue. Yeah, I'll join the queue.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask questions may please press star and 1. We'll take the next question from the line of Yash from Stallion Asset Management. Please go ahead.
Hi, sir. Thank you for the opportunity. I'm looking at your investor presentation, slide number 18, and there, you've given a chart that over the 5 years, your gross margins have gone down from 68% to 60%. So that's like 800 basis point, contraction. And just trying to understand, why this has happened. So you can elaborate on that.
So I have to check the exact details, but there's no difference in our gross margins over a period of time or our net margins. So I'll have to look into it in depth. I don't know which was the last year where we got some benefits, from the Guwahati factory. And, that obviously increased our profitability for that year because we got some benefit. But I don't think it was that long ago. So it could have been that year. It might not have been that year. I don't know when the GST was introduced. So it could be that when the GST was introduced, that year we still got a benefit from our factory. But overall, our gross margins haven't fundamentally changed. So it will be other expenses or other types of developments that we've undertaken that would change our gross margins, because our pricing structure has remained constant. In COVID time, yes, it went up a couple of percent because we were buying a lot of stuff. 2-3%, maybe we were buying from the spot markets and at extortionate type prices, but we had no choice. So, but that's somewhat, I think it's quite normalized if you ask me now. It's not completely normalized, but I'll say like the inventory, the supply chain is 90% back to normal at least. But, and then we had some minor price increases to cover the cost of those, whatever permanent price increases have been passed on to us over COVID and so on. So I don't see any fundamental change in our margins, but someone have to do a deep dive in that. But it's just a mix of which products we are selling versus what sort of margin we're doing in each product. But each product group by itself has a constant margin. I can say in financial year 18, the CIJ was definitely a much higher percentage of the business than what it is now. But I'll have to deep dive into it. So I think there could be two factors. One is that the CIJ was the highest percentage of our business at that point of time. I'm quite sure of that. The second could be that we were still getting some GST benefits at that point of time in that financial year in Guwahati. And that gave us that was actually quite profitable because that contributed straight to the bottom line. But fundamentally, in each product group, our margins remain consistent. And in some groups, maybe we've invested because we need to build a certain market share because we started late. But now everything is, we have enough references across each and every product group of ours. We don't need to do all of that anymore. So it's just about performing.
Got it. Okay. Thank you.
Thank you. Participants who wishes to ask questions may please press star and 1. We'll take the next question from the line of Karan Bhatelia from Asian Market Securities. Please go ahead. Mr. Bhatelia, I've unmuted your line. Kindly proceed.
Yeah, can you hear me now?
Yeah, we can hear you.
Yes.
Yeah, hi. Hi, sir, how are you? Sir, can you break up the revenue in terms of, printers, consumables, spares and others?
So
in terms of percentage.
Yeah, so printer revenue would be about 16%. Consumables would be about 62%. Revenue from spares and others would be about 7%. And the service component of income would be about 14%.
Okay, and how about mask? How are we seeing that business now?
Sorry, Karan, I missed out your line. Karan, can you repeat it?
Yeah. Sir, how about mask? How are we seeing that business?
Mask, I'll tell you what, we do not have a strong revenue to report as yet. I mean, as compared to the total revenue, it's just about 0.2%. But we are, in fact, trying to revive the business because the masks, as a, the health reason, I mean, masks for health reasons, that has actually come down. Rather, masks have been started being used as more of a hygiene thing. And so what we feel is that there are some industries where we can actually cater to and tap the market over there. For example, the chemical industries belt, which is in the western part of India, namely Gujarat. So we are trying to revive our marketing strategy in around that area to begin with. And so hopefully we'll try to increase the percentage of mask revenue in the total bouquet of our sales. Currently, it is just 0.2% of the total revenue.
Right. Also, sir, if you can help me, why is the depreciation lower? So have you fully capitalized the mask capital?
It's almost done. It's almost done.
Right. And also, Shiva sir mentioned about supply side challenges which we faced in last couple of quarters. So how do we see things shaping up there?
See, I'll tell you what we do is we have a risk-averse strategy. So the last thing we want to have it in our company is that we do not run out of stock. So apart from having a MSL and bill of material-based procurement, we also try to guess the demand for our products which would be in the coming offering, and then try to build up our stock. So we try to make sure that we are not out of inventory at any point in time, so that our production is not hampered. As of now, the problem what we used to have about chips has slowly eased out, and we do not foresee any problem unless there is some kind of major endemic or some kind of a war breaks out. But as of now, I think the problems for chips that has been eased off for this quarter at least.
Right. So apart from chips, all of the conductors, dyes, pigments.
Yeah. So entire electronics. All the raw materials in that particular portfolio. So we have, and as such, we are very risk averse. So we try to make sure that we do not run out of stock.
Right. Got it. Thanks. I'll follow back in the queue. Thanks. Bye.
Sure. Thank you so much.
Thank you.
Yeah.
A reminder to all the participants, kindly limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We'll take the next question from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Thank you, sir, for the opportunity. 2 questions from my side. First one is a notification that came end of July or start of August, as you say, for the barcodes for the top 300 medicine. How has the traction been for us post that? And secondly, if you could just help me understand which sector do we have the highest market share when it comes to our business?
Yeah, so looking at the pharmaceutical 300 brands, we are actually executing some projects on a few customers. I cannot give the names. But yeah, some of those brands or some of those production lines are responsible to execute. As of right now, I can say that it's a smaller market share percentage because we went with the business later. So relatively, we have a smaller market share, but we are executing on that. And we're still supposed to, we're already printing, we're already live, but yeah, we still need to have some debugging or some finalization of our installations going on for that. So we're working on that opportunity. And of course, it's a positive in that it expands the market to that extent. The second question was regarding the market share by industry. Overall, I think we've given a broad breakup that we are strong in industrials. I think that's approximately 65% of our business and 35% is in the packaging industry. Packaging would be food, which is the single biggest industry, beverage, pharmaceuticals, and personal care, home care, and that type of thing. And in the industry will be all your stuff like cable and wires, pipes, paints, lubricants, chemicals, steel, metals, all those types of things, automotive components and whatnot, cement, fertilizers.
Okay. So, I mean, sorry, just the same lines, the industrial segment, I mean, you're saying the 65% market share, right?
Yes.
You got, oh, okay,
Not
right,
65% of our sales.
No. So my question was, which among the sectors do you have the highest market share? So if 35% is the highest, which is the...
Obviously, like, we've given our market study is that our three main competitors are 35, 65, so 35% industrial, 65% packaging. We are 65% industrial and 35% packaging, which gives a broad breakup that we are stronger in the industrial segments as compared to the packaging segments. So that's what the type of information we can give you, but in very specific industries, we don't actually disclose that level of information down for competitive reasons.
Okay, sir. I'll fall back in case.
Thanks.
Thank you. We'll take the next question from the line of Hiral Desai from Anived PMS. Please go ahead.
Hello. Hello.
Mr. Desai, I have unmuted your line. Kindly proceed.
Hi, Shiva. Hi, Jaideep. A couple of questions I had. So if I look at the H1 revenue growth, we are at about 22% versus the typical 9 to 11% growth that we talk about for the industry. So just qualitatively wanted to know, given that manufacturing has got a large fillip over last couple of years in India, are you seeing, much more inquiries coming in, and is the demand environment much more sanguine versus the past?
Yes, so actually, there was somebody who asked it earlier. I don't know if it was Sakechi or someone, but what I said is, like I said, there's two sets of companies, or there are three sets of companies. There's small SMEs, what you can call, lately, which is part of our sales strategy. We've been deep focusing on the SMEs and focusing more on the larger, mid to large size companies only, because not because of capacity or any other reason. It's just more for capacity of service and the type of effort required to service the larger customers. We felt that the larger customers give us a more business on a per printer basis. We've just been focusing more on that segment. So the SMEs have a much more random purchase pattern, but it's a huge market in India, no doubt. The second segment is the corporates, and like I said, if I break them up into two parts, which was the guys in paints or lubricants or pipes, FMCG, personal care, they're always doing projects. So I think whether their capacity utilization goes up or down, they are growing at a sort of consistent pace. So I feel like that the demand in those segments is steady, and the number of printer sales, which is what we can control, is steady. Maybe we've seen some bounce back of the consumption per printer to normalized levels because of the end of COVID, and therefore people are utilizing the machinery more. So it's their capacity utilization which has gone up on the line, which has increased the amount of business of per printer that we are getting as a result. The third type of capex is the big ticket capex, which takes years to generate, which is the type of thing that ArcelorMittal or, somebody investing 20,000 crores like Nalco setting up something new, those types of things that happen. And I think there's more announcements, but, that's going to take time to drive down. What that does is it creates a lot of secondary business opportunities down the line, So when someone has a huge tire factory that they put up or something, that creates a lot of opportunities down the line for us. But those types of guys, I don't know how they do their own capex and how they predict it, but obviously they're looking at stuff over a longer period of time because it's a heavy investment, and like I said, it's not my business, but I feel like it seems like there's more positivity out there from some of our larger customers in the metal space, in the rubber space, and so on.
And Shiva, broadly from, the customers that we target, what would be the broad breakup between, let's say, the smaller SMEs versus large corporates? Just in terms of the number of printers that
have it, but we are more like, I'd say like, I'm sure like at least 70% plus of our business would be like mid to large corporates at like 80%, 80%.
Got it.
So it was a higher percentage of SMEs. It's been changing over the last 1.5 years or something because it's been stretching our sales and service teams. And, we just feel like either we could expand the teams or we could, which is difficult for us to manage, frankly. There's a management bandwidth issue there. Or we could, with a similar number of people, try to focus more on, larger customers, it's more profitable for us, relatively speaking, because, even the small customer demands as much attention as a big customer, but the amount of business we get of the larger customer over a longer period of time is higher.
Got it. Fair enough. And the other question was for Jaideep. This tax benefit that we have at Guwahati will be valid for how many years? So when do we actually move to a marginal tax rate for the year as a whole?
The benefits would end in May 25.
May 25. Okay.
Correct.
And then, so post that there'll be no benefits in terms of tax rate. So you'll actually
for the Guwahati, correct. For financial year 25-26, it will be back to the normal rate.
Got it. Perfect.
Yeah.
Thanks a ton, Shiva and Jaideep. All the best.
Sure. Thanks. Bye.
Thank you. We'll take the next question from the line of Himanshu Bisani from Niveshai. Please go ahead.
Yeah, thank you for the opportunity again. So in the last interaction, in the last conference call, you mentioned that we are working on, technology of mark print to come up with a niche product for Indian markets. Do you have an update on that yet?
Yeah, so we're still working with them, and we have started selling some products of theirs out here. Or we'd already started marketing it without quite selling it that much. Although we should actually have a first installation maybe coming up in January. Although that's been built and sold directly by them. But, it's something that obviously we're developing and we're working upon. But, these all, like I said, the standalone business which you see is the main business, and then all the consolidated stuff is like businesses which will contribute, but not like now, like maybe later down the line. Of course, that's where the risk is, because those all this we still have to prove ourselves, we still have to perform. But yeah, of course, we're working on development of those products. It's going on, and like we all figure out that some things cost quite a bit of money if you get everything from the Netherlands, and then some stuff if you do it here, the development is more challenging than we expect, because it has to work 100% reliable. We don't have those types of things where we can keep engineers left, right, and center, different locations and stuff. So, and our customers, expect that type of reliability and performance from us.
Got it. And so, on the pharma track and trace technology, do we have an update on, legal requirement? Because it's been like for months that we are expecting some legal requirements to get finalized. Do we have an update on that yet?
Yeah, I think the government has mandated that the top 300 brands have to comply with this requirement. Like I said, we've got part of that business, some brands, of those top 300 brands with us. It's still a smaller percentage of the market share, no doubt, of the overall market, because we are later in this, so we have less references, we have to prove ourselves, and we also want to execute well before we go to every single customer of the market. But the government has started with the top 300 brands. This I'm quite sure of. The exact date was supposed to start by 1st September. I don't know if they got an extension. I can't tell you that offhand. But I know that this government has not given any major extension or any relaxation of the norms beyond one point. So I think all those brands have to comply with the government regulation. Or maybe they've just got a few months to do this at most.
Okay. Thank you so much.
300 brands. I don't know how it's defined by the government, but someone would have to look at it, right? I think it's in terms of, revenue or something.
Got it. Thank you so much, sir, and all the best.
Thank you. The next question is from the line of Vignesh Iyer from Sequent Investments. Please go ahead.
Hello, sir. Continuing with our earlier discussion on this pharmaceutical side of it, top 300 medicines that have been notified. Can you let me know what is like the market size for this business could be, or if also to the point that if a lot of these medicines are already not mandated, even they were already doing it. Had a barcode for themselves. Just to get an understanding if the entire 300 medicine comes under as a business for us, or it is half, or just to get an idea.
So I didn't completely understand, but what I can say is that obviously it depends from line to line in this type of thing. Then it depends on whether the brand is a higher volume type of a product or is it a higher value type of a product. So some brands can be in the top 300 brands because the value of the product is relatively high. So maybe they just have one production line. So normally on a per production line basis, if you implement the primary, the secondary, and the tertiary, I can't say offhand, it can be anywhere between 25 to 45 lakhs. It really depends on your line. That's the approximate ballpark range of installation on one line. Then how many brands have how many production lines and so on, that's something that literally depends on, how you packing your product. So if someone is packing something like a Dolo, it's a relatively cheap product. So it will still be in the 300 brands, but they might have many production lines of it. Where someone might be making something like some sort of, insulin or whatever, and they might have one production line. And, so offhand, I cannot tell you, but obviously a big part of it is there are a lot of one-time components to the sale, like vision systems, ejection systems, conveyors, some integration, some other types of hardware and stuff like that. So it's what you're buying is you're buying a sort of line solution. You're not buying just a printer. So the printer is just one part of that production line.
Right.
And of course the software which controls everything. So the revenue is higher. The aftermarket revenue cannot be compared because, if we do say 1 crore billing in that, whereas we sold 50 printers, you get 75 lakhs of aftermarket business every year. Whereas obviously out here you won't get that type of billing because you maybe only sold 5 printers in the entire thing, and you'll get some AMC for maintenance of the software and solution. So the business per printer per year will be, or the overall repeat business of that will be significantly lower, although it's still substantial. So again, I cannot say because it really depends on how many lines. Whether people are only implementing on the secondary, which is what we're seeing mainly, which is on the mono cartons, and are they going to implement on the primaries? Are they going to do other things? So, depending on that, you can predict how much it's going to cost and what sort of size the market is going to be.
Oh, right. Got it. So also on the overall market size of it, if I'm not wrong, it is roughly around 1,800 crores or 2,000 crores. So what is your internal estimate of how the total market is growing for the next couple of years, maybe?
Yeah. So broadly, to reiterate, last year we did I think about 291 crores in standalone sales, and the market was, in our estimation, about between 1,750 to 1,800 crores, out of which the big four were somewhere between 1,350 and 1,400 crores. That is us plus Domino, Videojet, and Markem in March. And so we're expecting that we've seen that over a longer term the market is going between 10 to 12%. Assuming India is going at between 5 to 7%. That's what sort of the market growth rate is. So maybe this year, I think that, maybe the market will grow 10, 12%. So maybe it'll be close to 2,000 crores this year, somewhere between 1,950 to 2,000. And, obviously our market share depends on, how much we sell. And the standalone number should be looked at, is my personal view, because that shows what we're doing in our core coding and marking business, and what we're doing in a consolidated business has, like, it's not this 2,000 crore market, it's other things,
Right.
So obviously, I cannot say offhand because, we get these figures at the end of the year, and there's honestly no point like fantasizing about market share and doing all that other stuff, because what's more important is we focus on executing. So at the end of the year, we'll, because our competitors are private companies, we obviously get some information from the market, but, in the end, those things are not accurate. So it's better to always wait for, their internal numbers to be sort of announced or published, or wait for the ROC data. So, that's what the thing is.
If I could just squeeze one more in, just to understand, the reason for that was because we have a target of consolidated revenue of 400 crore by 25. I understand it's consolidated, but even if I have to take it on a standalone number, it would be fair to say that we would be going, faster than the market is. So it has to end up in such a way where we would be gaining market share.
Well, I think the board has set out a standalone target only for the coding and marking business to, from what I remember, what we've said. So what we do on a consolidated basis is not their concern. But like I said, it's obviously these are targets, and it depends on multiple factors. In the end, we have to execute well. So everyone wants to grow market share, but the point is that who's going to be successful depends on how well they're actually running their business, how satisfied their customers are, and so on. Like, we've been very clear that we've got a strong product portfolio, but we're not some sort of discount players, and I reiterated earlier in this thing that we're actually struggling to service all the SMEs because it's putting stress on our service networks and, our sales networks, and we're finding it difficult to manage that many extra people. So, so obviously you can see, what I'm saying, it's all coming down to the execution, and, that's all we're trying to see, because so definitely we want to, the target is to hit 400, and maybe the market might grow another 10-12%, from whatever it is, from 1750, and you can, or 1800, you can roll it out 2 years. So we should have some market share gains, but these all, like I said, in the end, what matters is what you actually execute, right? Because but it does standalone numbers, and of course the consolidated numbers are difficult to predict because these are like nascent businesses. They're small businesses, they're still in the very early stages. So out there it's just about growth, and honestly, till they're not like 50, 80, 100 crores in size each, there's no point really discussing those businesses, is my view, if they get to those sizes.
Right. Right. Thank you for your in-detail reply, and all the best for the.
Yeah, thanks.
Thank you. We'll take the next question from the line of Karan Bhatelia from Asian Market Securities. Please go ahead.
So some follow-up questions out here. So we were trying to price negotiations with our clientele in a couple of months. So are we done with that, or we still to see the real benefit of that?
No, your question is still unclear. I couldn't hear much of it.
So this is with respect to the price negotiations we were trying with a couple of our clientele. So have we started to see the benefits, or it's a few more quarters of that benefit?
Currently, we've done most of the negotiation, and most of the customers have given us an increase. It was gradual, but I think largely almost all customers have that price has been executed almost across the board, I'd say, over the last 12 to 15 months.
Okay.
So, and that sort of covered, I think, all the COVID cost increase, so it should be stable. But I don't think there's anything lined up as of now, at least.
Right. And Jaideep, despite of a double-digit growth in the consumable sales in this quarter on a YY basis, still our gross margins have seen some decline. So just wanted to have your thoughts on that. That's it.
I think what happens is that it actually is a mixture of the product mix. And first of all, it's between consumables and the printers. And within the printers also, we got about 5 or 6 different types of printers. So, so long as our top line is, increasing, we are not too much into it, like.
Okay. I think that was helpful. We just have Saket for one follow-up, and then we can close the call. Thank you.
Okay.
Thank you. We'll take the next question from the line of Saket Kapoor from Kapoor Company. Please go ahead.
Yeah. Thank you, sir, for this opportunity. Sir, as Shiva sir, you were mentioning about to look into the standalone numbers as the core operational numbers of the coding and marking segment. So how should one look at our investments that we have done currently in innovative control print BV, the mark print and all? How are they going to yield the results, the desired results going ahead? When are we going to reap the benefit of it, and where are we in terms of the stage where the investments are currently? I think so for mark print BV, we have some milestone being there so that we will be buying the remaining stake from the erstwhile promoter. So if you could give us some more color on the same.
Yeah, so as far as mark print BV goes, we've making a minor stake increase there, and what, like I said, is, Saketji, these are, so coding and marking, like I said, just giving it, because it's very difficult to understand on a narrow basis. Like we said, coding and marking was a 1,750-1,800 crore market in the previous financial year. Maybe this will be about 1,950, 2,000, whatever it is. So there's a certain size of market. Even if, we hit 400 crores and the market is 2,200, 2,300 crores, like the market is a certain size, right? You cannot be like, even Domino's only like 23-24% market share. So going beyond that, market share is going to be difficult, especially since we are finding it difficult to manage millions of people, and we don't want to increase that beyond the point. If we're struggling to manage it without losing the service quality and the product. So like those things are there. And at the same time, we are so I think that what I said is basically there is a sort of runway or whatever which I think what is a runway to grow, which is the marketing term that I think all the investment people use. And that's like basically 10 to 12% a year. So that's the thing that's there. So we can increase our market share and ramp up growth, but in the end, where the market grows is where we can grow a few percentage points faster year on year, which is good. And it's a good business, it's a profitable business. Now we had 3 or 4 adjacencies where we felt that we can have a strong market. One is in the packaging sector, which we're part of. All the way listed in IT hardware, by the way, I just found out today on Money Control. For some reason, someone can correct that, why we're listed on IT hardware. Anyway, that's a separate thing. I don't want to get into that. But we're in the part of the packaging industry. Then, so we started the V-Shapes business, and that was something that we looked at and looking at some more things that we can do in the packaging industry. Then, of course, we are part of the digital printing industry, coding and marking being one of the smaller parts of the digital printing industry. And we believe that there is a market, and we know that this market is being served by people like Markprint. It's an upcoming market that's there, where a lot of customers have a requirement to print additional information on the production line itself. So like I'm differentiating between digital printing presses, which are done offline and done by your printer, at their press. So this would be done by someone like Supreme Films or something like that, who would print some film digitally, some laminate, some flexible films, and supply that, versus someone who wants to do it on the production line with more limited amount of information. So the Markprint acquisition was focused more on that thing. And, like I said, it's been more challenging to, maybe because of COVID, maybe because of whatever. I won't say that. Maybe because, we are sort of hands full and we overestimated, what we could do and how fast we could do it. The optimism was always higher in a lot of cases than, the reality. And to use that to help drive that business faster. And the third area was, of course, the track and trace, which was well connected. The track and trace, the software part of the business, which was well connected with also our existing printer and business. And in fact, a requirement of especially the pharmaceutical industry and maybe one or other types of industries also where it's government mandated or the industry is finding some benefit in it. So all three of these businesses are basically to increase the target market size, because right now we're playing in a market of 1,800 crores, 1,750, 1,800 crores, it'll be 2,000 crores. So the idea was that, okay, we've got a strong team, we've got a strong setup, and can we look at developing space in these other markets. So my view is that any of these individual businesses come to like 50 crores, 60 crores, 100 crores. There's no point discussing them because they should be at least, each individual business at least 10% of our standalone revenue for it to be discussed. Till that point of time, we don't have any aim for them in terms of profitability or other things. Of course, they have to maintain their gross margins but in the end, we don't mind if they lose money or they invest more in R&D, they invest more in other types of capacity building. But the idea is more to grow the business, get to a semi-decent size and where the economies of scale will sort of start kicking in. And because of the sort of financial position that we are in, we can afford to be patient and invest in those businesses, fortunately. So I think, these are like all new businesses and, nobody can predict how it's going to work. There is always a risk that none of them will work, We feel we've chosen carefully, but, in the end, the reality is going to be found out by how we perform. So, nobody can say, JSW has got in the paints business. Some people will view it as paisa barbaad kare going up against Asian Paints and Burger Paints. Some people feel okay, they have a good distribution and ke paas ye hai, and they can be successful in that business. So I cannot say what's going to happen, because in the end, this is like that type of scenario where there's question marks, and so I think we just have to be patient for maybe at least 1.5 years more and see where we are. Maybe review in March 2025, something like that.
Right. And last point was, sir, I think so. It was a very successful buyback issue for the non-promoter shareholders. However, due to some technical issues or whatever was highlighted, the promoters could not participate in the issue. And also, so that was the impact. I think so that the sad part of the story where that the promoter did not get their share. So when we look at the current numbers and the equity instrument through OCI, the contribution for the last 2 quarters has been significant. For the first half, it is around closer to 25 crore. So post this buyback, what is our current exposure to the equity market, sir? Jaideep, sir, can you give any ballpark number?
We monitor our investment levels very closely, and in fact, we also take the approvals of the board as well. The market to market, the M2M security holding would be about 52 crores. Is it investment?
So the participant has left the queue.
The market value.
Ladies and gentlemen, yes, sir.
Yeah, is Mr. Sakesh still there on the call?
Sir, he has left the queue, and that was the last question.
Yeah, he had asked the question about, the equity investments, what we have. So I think I should give her the answer for that.
Sure, sir, you can go ahead.
Yeah. So the cost of the investments, is just about 42 crores as of 30th of September.
Thank you, sir.
Yeah.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yes, this is Shiva Kabra. First, I want to thank everyone for participating. I know it's a busy period, and happy Dussehra and a festive season to everyone in advance. Thanks to Karan and the AMSEC team for organizing this. I really appreciate it. And we just want to reiterate that it was steady for us this quarter. Those growth initiatives are there, but it will take some time for us to see those results. And we'll keep you posted sometime in the beginning of January with our next quarterly result. And if anyone needs to reach out, please feel free to contact Jaideep for any details that is required by anyone. Thank you.
Thank you, members of the management. Ladies and gentlemen, on behalf of Asian Markets Securities Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.
Yeah, thank you so much. Bye.
Thank you.